Hi everyone and welcome to Infinox Market Insights with me, Richard Perry, analysing markets for Infinox on Friday the 5th of November. Now it is non-farm payrolls Friday today, so we're looking out for a fair bit of volatility later in the session, but in front of the payrolls report, the traditional element of cautiousness has set into major markets. Forex markets not really doing a great deal today, a shade of dollar weakness, but nothing really decisive enough to turn around the trend, which seems to be reasserting itself once more of dollar strength. Now, equity markets have continued higher overnight. In the Wall Street close, there was another all-time high. It's a little bit of a cautious consolidation early morning today, but these markets are looking a little bit stretched, and that's a bit of a theme that I'm looking out for in the chart analysis that I've got today. Now, onto those payrolls data. Well, it comes this afternoon for UK traders, but what we're looking out for is around about 425 to 450,000 jobs growth, depending on where you get your consensus figures from. And we're also looking for an improvement on the unemployment rate to 4.7%, and also wages growth up to 4.9%. So all these different aspects will come together and will determine whether the payrolls report is positive or negative for the dollar. So stronger jobs growth would be dollar positive, but also potentially a little bit of risk positive as well. But considering how that might impact on the tightening of monetary policy for the states, maybe not so. So with regards to the charts I'm looking out for today, I'm looking at euro dollar, which has pulled back to a key support. I'm also looking at the price of gold, which has rallied to a basis of resistance again, but it's ranging and very choppy. And finally, I'm looking at the SP 500 futures. Continues higher, but how far can it go? So let's have a look. So on to the Infinox MT5 platform now, starting off with Eurodollar. We can see that Eurodollar has been extremely choppy actually in the last few sessions. Ever since the ECB meeting really last week, market has been flowing higher and lower, and again it sharply fell away yesterday, and it's now testing this key basis of support again. A little bit of a tick higher today, but essentially the downside pressure seems to be growing. Look on the 4-hour chart, you can see a fairly consistent housing of the RSI on the 4-hour chart down below the 50 line. 50 seems to be a basis where resistance is coming in, and that would suggest selling into strength. Now, testing of the key support, 1552. 1525. If that gets broken to the downside, well, opening up to the weekly chart, you can see that there's not a great deal of support, maybe back towards sort of 14 big figure, a bit of a breakout point there area, but essentially you're looking at to the 13s and 14s again, maybe even the 12s. So this is a key moment for Eurodollar on this payrolls report. Strong payrolls would drive that market lower, I think. Onto the gold chart. Well, again, gold has been very uncertain over recent weeks. Essentially, I look at gold and think this is a range. You've got 1810 on the upside, and pretty much now support coming in consistently 1750, 1760. It's a pretty tight range, isn't it? And very choppy, uncertain within that range. I've talked previously about this pivot at 1780, where it had a basis of support, then became resistance, then rising above it became supportive. But in the last week or so, it's not really paid too much attention to this pivot. So it's a little bit of a gauge that maybe is an anomaly, maybe. But yeah, I just think back towards 1800, it might struggle again, especially if the dollar strengthens on the back of payrolls report. And if payrolls report is strong, that would be gold positive. Sorry, that would be dollar positive and arguably a bit of risk positive as well. That should be gold negative. So gold pulling lower on a strong payrolls report. But yeah, just ranging really. Until you get a breakout above 1810 decisively, I wouldn't get positive about gold until you get a breakdown below 1760, 1750. Again, I wouldn't get negative either. Finally, S&P futures, look at that bull run higher. This is a decisive move higher. You can see RSI in the mid-70s. Now, there's only been once in the mid-70s this year, which is incredible, isn't it? That was back that we saw in July. Pretty much, yeah, this is the most overbought it's been for this year, apart from that moment, and it's a really strong run higher on the S&P futures. Will it continue? Of course it can continue. Where there's no resistance, market can continue higher. The question is, at what stage do we start to get a little bit cautious about this one? Well, momentum indicators, 4-hour chart, little really showing on the 4-hour chart to suggest there's slowing momentum. Continues to find support around this rising 21 period moving average. Higher lows, higher highs, breakouts, finding support at old resistance. Yeah, it's continuing higher. So I'd be still playing this on the long side, but being very cautious and keeping stop losses tight with regards to the potential for a little near-term correction, which would again be a buying opportunity. So thank you for watching this video. I hope you found it informative for your trading. Join me again on Monday, where we'll be looking ahead to the new trading week, where the dust is settling on a very hectic period of trading. Maybe we'll get some trends. So I'll leave you with the Infinox support and resistance table, and I will speak to you then. Good luck in your payrolls trading, everyone.